Hello everyone. Good morning from this part of the world. It's 9:35 a.m. here, and depending on what time zone you're tuning in from, I wish you a good afternoon and good evening. And to my Christian brothers and sisters out there, um, compliments of the seasons. Happy Easter to you all. I'm very excited to welcome you to our first edition of the Forex Morning Mastery for this week, where we are planning to get ourselves prepared for the new week. And of course, we have a handful of financial instruments that I want to be looking at this week. Assets such as the US oil spot, the gold commodity, my favorite, and of course, I'm still contemplating which one to take out of the USDJPY and the GBP USD. So I will be looking in the comment section. If you prefer any of these assets, let's drop it in the comment section and allow democracy to take its day. So if you want the GBP USD, let me know in the comment section. If you want the USDJPY, let me know in the comment section. Both setup have some interesting trading ideas around it. So I would love to bank into that if you let me. So I also see Marina J. I hope I pronounced that name correctly. Good morning. Glad to have you around with us this morning. So before we begin, I would love to intimate newcomers on what we really do here. So my own name is Sheriff Daramola, and for the next 40 to 1 hour, I'm going to be your host as we shall be diving into the financial market with the utmost intent of identifying potential trading opportunities. And please understand that this is not a signal service platform, but an educational avenue where we all come together to have a deep insight into the market using the technical and fundamental perspective of the market to strategically position ourselves for the next move. And the Forex Morning Mastery runs 3 times in a week: Monday, Wednesday, and Friday. So once again, I welcome you all on board and encourage you to actively engage in the comment section. Now, before we go into the technical details, it's important that we take a look at the market drivers that will be influencing the US dollar. Remember, the US dollar is connected to all of the assets we are monitoring. So it's important for us to understand what is going on behind the scenes and how it's going to be influencing the sentiment in the market this week. So the US dollar has been on a nosedive. The US dollar is very, very weak at this point. In fact, very, very cheap. As recently, another thing that also had added salt to the wound is Trump's threat to remove the Fed chairman, which has obviously rattled the market and knocked the US dollar to 10-year low, let me say. I think this is the lowest point the dollar has been in the last 10 years. And of course, the aggressive US tariff and tariff U-turns are sparking recession worries and eroding confidence in the US dollar, making the US dollar susceptible to further downside. Then we also saw the cooling US inflation. We saw the PPI and of course the CPI report last week, which of course showed signs of softer inflation, and this obviously will be ramping up bets on Federal Reserve rate cut expectations and putting further pressure on the US dollar. Now, with that said here, it appears that all factors here is against the US dollar. However, if we take into account the Fed chairman's speech last week, he spoke on Wednesday, and one of the things he said is that they will be taking a data dependent approach. That is, they will be waiting to see if the tariff situation will cause inflation before deciding to cut interest rate. And for me and for market in general, this is more or less like a hawkish outlook from the Federal Reserve, and the idea that rate cut will not be cut anytime soon may probably give the dollar some up. So today we are going to be looking at how this is going to play out, but presently we will be riding the dollar to the downside due to the weakness across the assets we will be monitoring for this week. And of course, we'll look out for buying ideas. For instance, if the Fed speeches this week, if you look at the economic calendar on your screen, we have a handful of federal officials speaking this week. Like tomorrow, we have the Fed, we have Aka, we have Kashkari. Then fast forward to Thursday, I think we also have Kashkari speaking on Thursday. Then on Friday, do we have any? Okay, we do not have any. So these speeches here may ramp up sentiment in favor of the dollar, or it may even push prices to the downside. But from a long-term perspective, the US dollar is very, very weak at this point. Then if you look at the economic calendar, we have a bunch of economic events this week, which will be driving the sentiment around the market we are monitoring. We have the IMF meeting, which is going to be happening throughout the week. For those who don't know, IMF meeting is a yearly event where finance ministers, central banks from all around the world come together to discuss. And during this discussion, it's very likely we'll be hearing things about the trade tension, especially the U.S. tariff and retaliation talks, global growth forecast, debt pressure for emerging markets, and of course, a lot of things will be discussed. And market will be looking to see headlines from this, want to know the growth outlook, policy signals, watch for comments on interest rates and debt relief plans by central bankers, which will be giving some insight into the major currency assets in the financial landscape. So this is an event happening throughout the week, so we will be looking out for headlines from this event. Then depending on which asset we will be looking at, the UK will be publishing the S&P Global for the manufacturing and service sector. This is a data that gives us an insight into how well the manufacturing and service sector of that economy is doing. I think this is also going to be happening for the US economy on Wednesday. So we have the Bank of England's Peel speech coming up. The Bank of England's governor is going to be speaking on Wednesday as well. And then we have some other event from the United States, like the initial jobless claim count, a weekly labor-oriented data that will be giving us an insight into how well the labor sector in the United States is doing. From last week, the labor sector is tight at the moment. It's doing pretty well. So we are going to be looking at follow-ups on that one. Will there be a build-up in momentum, or will there be a contraction in that sector? So these are things that we will be looking at for the week. So let's take it a step at a time. There are no other major events today. Tomorrow, we're looking forward to the Fed speeches. Haka and Kashkari will be speaking, and we want to hear what they will say about the current economic outlook. And this could give market an insight into whether or not the Fed will cut interest rate in May. So these are the major events we will be looking forward to. And of course, we understand that the anticipation of this event has its own way of influencing how market participants will behave. So in that regard, we will be diving right into the charts. And of course, the first asset we are going to be looking at this morning is going to be the US All Spot. I had a buy position triggered this morning, but unfortunately it got into a loss. And before I even go into the US All Spot details, I want you to look at the bottom of your screen. You'll see the account size that we started with $1,000 at the beginning of this year has grown to over 1,300. So we finally broke the 300 barrier. Remember, we spent a lot of time within that range last month. Is it last month? Yeah, towards the end of last month, we were around 1,028. It dropped down to 1,006. But finally, and thanks to this gold trade we took this morning, if you watch my video on gold, I told you I will be buying the gold right away at the beginning of the week, and of course we were able to scoop in over 100 pips. I wasn't able, okay, about 200 pips, sorry. So if you look at the bottom of your screen, you see we have 2137, that's about $210. Then for the GBP USD, I had the buy position running over the weekend, and that one closed with over 100 pips following that massive move from the pound sterling this morning. And that is that loss from the US All Spot that I took this morning with about 40 pips loss there. So going back into the details here, let's look at the US All Spot and what are the chances of both buyers and sellers in this particular market. Now, before we go into the higher time frame, that is the 4 hours time frame, let's take a deep dive into the major driver in this current market. And from all ramifications, the US All Spot is on the downside right now. Price has consistently continued to find lower highs, as you can see here. Since the beginning of the month, we saw price drop from around the $72 area right into the lowest point in years at the $55 level. Now, going into the new week, the question on everyone's mind is whether this momentum will continue or not. Now, if we look at the fundamental factors behind the scenes, everything supports a bearish downturn. Now, we have the latest development now is the progress in the US-Iran nuclear talk, as there's a recent advancement in negotiation between the US and Iran, and this has raised expectations of increased Iranian oil entering the global market. Remember, there's been sanction on Iran. Iran is not able to sell oil into the global market. But with this development, there is a high chance that Iranian oil will come back into the market. Now, this will potentially boost supply, contributing to the decline in oil prices. Of course, you know our simple economics. When there is oversupply in the market, what happens? Due to the surplus of this commodity in the market, price tends to drop. And this for me could be a reason to continue to sell the US All Spot. Then another development is the Russian-Ukraine ceasefire, where we had Putin play a temporary ceasefire for the Easter situation, which further eased geopolitical tension, reducing the risk premium associated with oil prices. Then I talked about this last week. OPEC Plus planning to increase production by 411,000 barrels per day starting in May, and that's about 2 weeks from now. And this could add global supply concerns into the market. So the more production of oil into the market, the more surplus this commodity is, and it's likely going to push price further to the downside. So if you ask me, the sentiment is more or less leaning to the downside. However, if we consider the recent global demand outlook from the International Energy Agency, of course revised the demand lower, and this is as a result of the trade war tension. So for me, the path of least resistance for US oil at this point is to the downside. So we want to look out for ways through which we want to be selling this asset this week. We want to be looking out for selling ideas around whatever structure we are able to identify on the chart. So we are going to be keeping an eye on the outcome of the US-Iran talks as they progress during the course of the week. We will also pay attention to global economic indicators such as the manufacturing and service PMI from the United States. I told you this is coming in on Wednesday, and if it comes in higher, it could make the dollar increase in value, making the US oil much more expensive for other currencies to buy. So these are things we need to take into account. Now, looking at the chart and trying to decipher how market participants are thinking, we want a technical structure to do that. So what I did here on the 4 hours time frame was to take into account the character of price action in the last 2 to 3 weeks, and this was what I was able to come up with. Now, the last 2 to 3 weeks I've seen price drop significantly from the $72 area. As you will see, we have a massive impulsive bearish leg to the downside, testing the $55 area before price transition into a consolidation phase through the remainder part of the month of April. And this consolidation phase here has transitioned into a structure that we are going to be using to navigate this market this week. So let me show you the structure. Let me give you a visual representation here. So we have the bearish leg. We have an ascending trend line and a descending trend line. And if you look at this closely, you will see something like a downtrend continuation pattern that is a pennant or a flag pattern, depending on from which perspective you are looking at this from. However, from a theoretical standpoint, we expect that the support line of that pennant or flag pattern will be broken to the downside to incite bearish ideas. But as you can see, the market does not all the time follow theoretical expectations. So what we saw last week was a rebound in the US crude oil, and then we saw price break out of that resistance line of that structure to test the $64 level, a level which has been a strong selling niche this month. Now, immediately price tested that level. We saw the move happen on Thursday. So the beginning of the week, we saw price find selling pressure around this area. Now, I'm beginning to suspect that price may likely come back to retest the structure that was broken. So what structure am I talking about here? So I'm talking about this descending trend line capturing the resistant line of that structure. So we had a breakout of structure, and theoretically we expect that price may likely come back to retest the structure in an attempt to continue the uptrend move, or even break it to the downside to incite more selling opportunities. So with that said here, we are at a critical juncture where if we look at the distance between where price is right now and that level, we are talking about over 200 pips, and it's not something we want to miss out on. So we will scale down into the lower time frame to see how the market has reacted to that $64 area. Now we'll begin to see things more clearly on the 1 hour time frame. So scaling down into the 1 hour time frame, this was what I was able to come up with. So you will see here that the new week has started on a strong bearish note. The price started the week around the $62.70 level. So that is our resistance line for the week. Then it dropped into the $62.60 level, and we saw a little bit of consolidation during the Asian session. And due to this consolidation and the inability of sellers to break through this support line here, I thought it was a formidable support line. So I placed a buy stop order above the $63 area, which was triggered. Unfortunately, I was taken out in a loss on that one. And right now, I already have a sell position triggered already. As you all know, whenever we have a range bound structure like this, as you can see, price is confined within a range for the first 10 to 11 hours, as you will see, between the $62.70 level and the $62.60 area. And of course, we want to see a signal in the form of either breakout of the resistance line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. So this is where the idea of selling comes in. And if you look at the bottom of your screen, I already have a sell position trigger. Hopefully this momentum will continue to the downside. So at the moment, I want to continue the bearish bias, which has been supported by a lot of factors like the progress in the US-Iran nuclear talks, the Russian-Ukraine ceasefire efforts, the OPEC plus production increase, and of course, weakening global demand outlook. So for me at this juncture, the path of least resistance for crude oil remains to the downside. Now, if I am going to consider buying, you know how we do it in this community. We always try to ensure that we keep both options open so that even if price takes us out of the sell, we are prepared to join the uptrend move. Now, if I want to buy, I would rather see price break out. First of all, I'm not jumping in right away due to this breakdown of the support line because it could turn out to be a false breakout. So I would like to see confirmations happen, like a retest of structure, where I will then be willing to join an uptrend move and of course had more positions at the breakout of that resistant line at the $62.70 level. So it's a simple trading setup we have here this morning on the US crude oil. Let's see how the market is going to play out here. So I would like to take a stop here and see if there are any questions whatsoever as regards to what we are seeing on the chart. So I will encourage us all to mark out the structure, as we will be needing it as a reference point to guide our decision today. Then I'm beginning to notice a trend line here which could further help us navigate this market. So I see a trend line here, so I just marked it out now, and we'll continue to use it to navigate this market. So as long as price remains below that descending trend line, we shall feel confident in this sell position. So there you have it, my in-depth look at the USOILSPOT for today. If you have any questions, feel free to let me know in the comment section. So I will take the next 10-15 seconds off. Let's see if there are any questions before we move on to the next asset on our watch list. Stay tuned in, guys. So I see you, Jonah Aruna. Good morning. How are you doing? And trust you had a great weekend. All right. So in the absence of no questions, I want to assume that we are all on the same page, right? Hopefully you've marked out the structures accordingly. And at this juncture, we maintain a bearish bias as long as price remains below that descending trend line and the support line along the $62.60 level. And of course, I will be updating us accordingly on my Telegram platform if we see any new development evolve on this chart. And like I said earlier, we shall continue to monitor supply indicators, like keeping an eye on the outcome of the US-Iran talks, of course, very, very important. And as this will influence supply dynamics, and of course, we want to be paying attention to global economic indicators such as the manufacturing and services PMI, which is coming in on Wednesday's trading session. That's about 1:45 p.m. UTC. So I wish us all the best of luck on the US crude oil, and I guess we'll move on to the next asset on our watch list. Stay tuned in. Now, before we move into the next asset, like I told you earlier, I am still indecisive. I'm still contemplating on which asset I'm going to be taking. Should we do the GBP USD or should we go ahead with the USDJPY? We have been trading the GBP USD for the past 3 weeks now, I think. 3-4 weeks we have been trading the GBP USD, and we've done pretty well. And of course, we saw another massive momentum this morning on that asset. Let me show you quickly. We saw a massive move to the upside this morning, and I showed you how I hit TP target on that sell, on that buy position this morning. Look at the bottom of your screen. I had about 100 pips TP this morning as I placed my TP at the 1.33940 level. That is the GBP USD. Then the USDJPY to also have some interested setup at the moment. Please let me know which one of the two do you want us to take this morning. And I'm leaning towards the USDJPY at the moment. That is what I'm thinking at the moment. But since we have been running the GBP USD for a while now, I guess can we take the GBP USD instead? And let's do a follow-up trade on that particular position. So no one is commenting. I'd love to hear from you guys. I don't just want to make a decision right just like that. Jonah Aruna, are you there? Should we take the GBP USD or we take the USDJPY? Okay, so Jonah Aruna says we should do USDJPY. All right, so let's go into the USDJPY instead. And in fact, I have a beautiful setup that we're going to be using this morning. So let's look at this from the higher time frame. Okay, so okay, Iyobosa also has supported the idea around the USDJPY. So I think majority will carry the day then. So USDJPY, here we go. So the next asset we take now is the USDJPY based on majority. Okay, so before we go into the technical details, it's important that we also understand the market driver. What is driving this market? As you can see, since the beginning of this year, the market had continued to drop to the downside, as you can see. And of course, when we connect the series of lower highs, we have a beautiful descending trend line. I think I have the descending trend line here. All right, so we have a beautiful descending trend line, as you can see here, since the beginning of the year. This is where the year started. As you will see here, the year started here. And hold on a second, please. Hold on a second, please. Okay, so the year started here, and since then price had continued to drop, favoring the Japanese yen. And recently, the ongoing trade war fears and recession worries continue to push more money out of the USD portfolio into the yen, a classic go-to market during stress like the situation we are in right now. And of course, another factor that is supporting the yen is the rising Japanese inflation. We saw the core CPI last week jumped to 3.2% in March, keeping the Bank of Japan rate hike hopes alive. So the tendency for rate hike is very, very strong at this point. And you know, when rate hike expectation increases, the chances that the currency asset for that economy will increase in value also increases. And this obviously has supported the yen so far. Then there is the recent, the new US ambassador says is extremely optimistic that a deal will be done with the Japanese economy lifting as regards to the US-Japan trade talks. And this is also lifting confidence in the yen. And if you ask me, the path of least resistance for the Japanese yen at this juncture remains very, very strong. And if you look at the structure here on the daily time frame, despite the strong bearish momentum this year, you will see that price is at a critical juncture. And which juncture is that? This is the area between the 139.500 and the 142.00 area. What do you notice? If we go to as far back as the year 2023, you would notice that this area had played a significant role in buying opportunities. The market has seen the US dollar cheap enough to buy around this area. So let me give you a visual clarity to this. You can see anytime price comes into the structure, we see buying opportunities spring in. The same thing happened in December 2023. We saw what happened here again in September 2024, and right now price is back into that structure. And at this point we want to be asking ourselves, is it right to start buying now, or we want to get ready to sell? If we consider the fundamentals, all path leads to the yen at this point, thanks to the safe haven flow, rising Japanese inflation, and of course optimism on the US-Japan trade talks. However, if we consider the recent warning from the Bank of Japan chief, where he said that US tariff could hurt the economy, raising the chances of a policy pause. Now, if he is saying that the US tariff will hurt the economy, for me, this seems like a dovish outlook. Now, despite the fact that inflation is high and the chances of increasing interest rate is also on the table, this recent warning from the Bank of Japan governor calls for concern, as if this comes to play, the chances that interest rate will be paused is very likely, and this could throw a spanner into the wheel of the rising Japanese yen value. Then secondly, the overbought condition around the Japanese yen may be stretched into the short term, making the market start taking some profits of the chart, and profit taking around this area could start anywhere from this area between the 139.500 and the 142.00 area. So what will be our trading strategy around this structure? How do we position ourselves for either buying or selling the USDJPY after understanding what is going on behind the scenes? So let's go into the chart and see how market participants are reacting, or let me say digesting this information. So like I said, we are at a critical juncture, a beautiful demand zone, an area which has a memory for buying power. So we want to see how the market is going to react to the structure. So my key level for this week is around the 142.00 area. If price remains above the 142, I want to be considering buying the US dollar against the Japanese yen. But if price drops below the 142, I want to be considering selling ideas. Now let's scale down into the 4 hours time frame. I have a beautiful trading setup here. For those of you who are part of the Forex Market Prep yesterday, we run the Forex Market Prep every Sunday. You must be in profit on the USDJPY by now, because we discussed this in detail yesterday, and this is what we saw here. Now let's zoom into the structure. So during our discussion yesterday, price was within a range bound structure that is between the 142.750 and the 142.00 area, and this all consolidation phase was happening within a technical structure, which is a descending a downtrend continuation pattern. So let me show you quickly what I mean by that. So we have this impulsive bearish leg, and then we saw the consolidation phase transition to what is looking like a descending triangle, right? So we have a descending triangle, and I was saying here yesterday that we are going to be selling the breakdown of the support line, which also doubles as the key level for this week at the 142.00 area. So for those of us who are part of the Forex Market Prep yesterday, you currently must be running in profit right now of about 150 pips approximately. So it's advisable that you move all your stop losses and secure the current sell position. So this is for those of us who are part of the Forex Market Prep yesterday. Now let's go into those of us who are new here. So this is what I was looking at yesterday anyways, but at this point in time, price has moved really far. So what we are going to be doing at this juncture is to exercise patience, and let's wait to see if the market will do a reversal, that is probably come back to retest this key level, which also doubles as the support line of the downtrend continuation pattern. If it happens, we have price come back into the structure, then we could continue the downtrend move. Now, it is not all the time that price comes back to retest structure. Of course, it's not all the time price action follows theoretical expectation. Instead, we could see a downtrend continuation pattern evolve here. Price goes through a consolidation, then the breakdown of structure incites the downtrend move. Now let's scale down into the 1 hour time frame, our execution time frame, to see how the market is playing around the 140.600. So scaling down into the 1 hour time frame, we'll begin to see things more clearly. So I will zoom into the current structure. Okay, I think we should scale down to the 15 minutes time frame, right? I think so. So let's scale down into the 15 minutes time frame and look at what we have here. So I think it's high time we want to be placing a sell stop order below the 140.550. So I will do that right now. I will place a sell stop order right below the structure right away. Okay, so let's do that now. Sell stop. Yep, I just done that now. So Below the 140.550, we place a sell stop, and I will explain to you why I'm doing that. Okay, hold on a second. So we have the 140.550 level. So that's the structure, that's a support line right now. That's the lowest point price action has been so far in a long time. And secondly, we have a descending trend line. If we bring out our line chart now, you will see that we have something like this. I think we have, is it this one? I think it's this one. We have a descending trend line, and if you look closely into the structure, you will see a similar pattern with the one we saw on the daily time frame earlier. I was talking about a downtrend continuation pattern in the form of a descending triangle, and the same thing is manifesting here. So to give a visual representation of what I'm talking about, so the week has started on a strong bearish note. We saw price drop into the structure. We had a support line here, and then look at that descending channel evolve. Now, for the confirmation, or let me say the validation of the structure, we want to see price break down the support line, and this could incite more selling ideas. So that is why, it's as already triggered right now. So the USDJPY is triggered already below the 140.550, and of course, where will our stop losses be? Of course, we want our stop loss to be anywhere above the 140.800 to give enough breathing space for price action to move around. So move my stop loss there, and let's see how the market is going to play out going forward. And of course, I will be updating us accordingly as we continue to monitor price action through the course of the day. Now, if it happens that price finds support here and then price breaks out, retests this trend line, it could incite buying opportunities. That is a breakout retest of that descending trend line. But till then, let's exercise patience and hope that this bearish move will continue its momentum to the downside. If a breakout retest of that trend line happens, we could be looking at a reversal setup, bringing price back into that key level before that downtrend continues. And we are talking about 140 pips in that regard. So let's see what happens here. So I will mark out a structure for any buying ideas. Let's put it at 140.700. Okay, so we have the 140.700 level marked out, and like I told you, we want to wait for a breakout and retest of structure for confirmation's sake before jumping into a buy. All right, so we have the buy here, and then we are selling below the structure, which has already triggered. So let's see how the market is going to play out. So let me zoom in so we can see things clearly and be able to draw the structure out on your charts accordingly. So there you have it. Simple trading setup ahead of today's session. Let's see how far this momentum is going to go. So I wish us all the best of luck on the USDJPY. If you have any questions whatsoever, feel free to let me know in the comment section. So I'll take 5-10 seconds off. Let's see if there are any questions before we move into the final asset on our watch list. So Jonah Aruna, Iyobosa, if you have questions, let me know in the comment section. All right. So I see you, Soldier Pete. It's been a long time. How are you doing today? I trust you had a great weekend and glad to have you around with us today. All right. So in the absence of no questions, I guess we are all on the same page. And please do not forget to give the video a thumbs up. Your likes are very valuable to me. It inspires me to continue to do more of this, and of course it also helps the algorithm push the video to a wider audience of traders who may also find this content beneficial to them. So if you are yet to click on the like button, please do it right away. And thank you very much for those of you who had already clicked on the like button. I really appreciate your support. So in the absence of no questions, I guess we are all on the same page. Please mark out the structures accordingly. Let's see how the market plays out. We maintain a bearish bias. The momentum has been bearish since the beginning of the year, and the rising Japanese inflation has continued to support this trend. The optimism around the US-Japan trade talk as well is also a positive light to this. And of course, we have a huge flow of safe haven into the Japanese yen, which is taking a toll on the USDJPY. So once again, I wish you the best of luck on this one, and let's move into the final asset for today. Stay tuned in. So the final asset on our watch list is the gold commodity, my favorite, that is the XAUUSD. And of course, we can see the gold keeps breaking record high week in, week out, and just this morning we saw another record high at the $3,397 area, and the last 3 or 4 hours I've seen price consolidate around that area. Will it go on to break the structure? Well, let's look at this together. Now, what are the fundamentals behind the scenes that is driving this market? Of course, we all know safe haven demand has increased seriously as a result of investors fleeing from trade war risk and recession fears, putting all their money into non-yielding asset like gold. And of course, this has resulted in a weaker US dollar as the dollar continued to slide. In fact, it's at its weakest point in the last 2 to 3 years on growing Fed cuts rate expectations and of course recession worries in the United States. Now, we saw this morning the U.S. Treasury bond yield fell on speculation of rate cuts starting as soon as June, making the non-yielding gold commodity much more attractive for currency gold buyers, for investors. And for those of you who watch my video on the XAUUSD, I shared this during the weekend. I told you in that video that I'm going to be buying the gold commodity right away at the beginning of the week. And the reason behind this was basically as a result of this technical structure we saw after trying to understand how market participants are thinking. I will not be going into the higher time frame on this one. I already done a video on this asset. If you haven't checked it, please do so, or let me just drop the link in the comment section so we can go ahead and check it after the live session today, so that we can all have an insight into what how market participants are thinking. So I just dropped it right in the comment section. Okay, so I just dropped it in the comments so you can go ahead and check it. So this was the trading setup I established in that video, and I told you I'm going to be using the 3,320 level as my key level for the week. You know how important our key levels are. It serves as a yardstick guiding our trading activities around the current structure. And if price remains above the key level, we want to be maintaining a bullish bias. But if price drops below the key level, we look out for selling ideas. And of course, you can see price was above the key level at the 3,320. And of course, we saw price break out of this descending trend line, further supporting an uptrend continuation. So I bought this morning. Let me show you the history of that trade. As you can see at the bottom of your screen, I had my TP had the 3,343. As you can see, I didn't even maximize it. Somewhere around here was my TP, and I was able to make over 200 pips. Sorry, yes, is it 200? Yes, 200 pips on that move. And for those of you who capitalized on it, well done, kudos to you. And if you still have your positions running at this point, kindly move your stop losses and secure this position at this point. We are within uncharted territory, and you know when price goes into uncharted territory, there is this tendency for fear of missing out to happen, as those who had capitalized on that bullish move may want to start taking some profits off the chart out of fear that price may crash from this area. So it's an uncharted territory. It's advisable you move your stop losses anywhere around the 3,375 area. Seems most appropriate to move your stop losses to. Now, in as much as the path of least resistance for the gold commodity remains to the upside, there are other factors that could also bring it to the downside. First of all is the overbought technical situation. Gold is at an all-time high, and there is always the warning of a possible short-term pullback that could happen from this particular area. So we have the all-time high here at the 3,396.700. So I want to mark that out. So that's our all-time high right now. So we have it at the 3,396.70 level, right? So that's where our all-time high is, and the last 3-4 hours I've seen the price consolidate around that area. Are we going to see price break out of the structure? Well, I think the chances that price will break out of the structure is high, so I will place a buy right away, as you can see at the bottom of our screen, and then have our stop losses around the $3,380 area, giving enough breathing space for price action to move around. So I just placed a buy and have my stop loss around the 3,380 level. Now, one thing we need to understand here is that the overbought situation could bring price to the downside. That is one, we need to take that into account. Then Easter holiday volume remains light, and choppy moves are very likely until liquidity returns into the market, and this could lead into a situation where price respect the technical expectation. Remember, we have a breakout of this descending trend line, and the chances of price coming back to retest the trend line in an attempt to continue the uptrend is very, very likely. So we need to take that into account as well. So in that regard, we want to open ourselves for selling ideas, and if we are going to be selling, I think below the 3,385 is looking promising to sell, and I will explain to you why that is. So let's mark out this level 3,000, what did I call it again? 3,385, right? 385. Okay, so we have it right there, and so I'll be looking to sell short term. And in fact, if you look at the distance between that level and the key level, we have over 600 pips to catch. So there is still a chance for price to drop. So the reason why I have marked out that level will be explained in detail now. So look at the structure here. The last 4 hours, what did you notice? We notice a consolidation phase, right? Price continues to trade within the 3,396-ish and the 3,385 area, emphasizing the prevailing uncertainty at this point in time. And you know how we use our range-bound structure. Of course, as long as price remains within that range, we exercise patience and wait for a signal that buyers or sellers have won the negotiation. And the signal we will be looking out for is either price breaking out this resistance line to give us opportunities to buy, or breaking down the support line to give us an opportunity to sell. So if I'm going to be considering selling here, I want to see price break down, retest the 3,385. Look out for retest of structure on the 5 minutes, 10 or 15 minutes time frame, where this will confirm that sellers are getting stronger. Then we can join the bearish move. And of course, we have structures here where as soon as price gets into them or close to them, we move stop losses, secure the current sell positions while we continue to monitor price action as it moves further to the downside. So if I'm selling, I will place my TP at that key level at the 3,320. It could drop into the trend line, but let's see what happens. If the momentum gets stronger, I will advise us accordingly on both my trading view and Telegram platform. So it's a simple trading setup we have here on the gold commodity. And if price goes ahead to break out of the $3,396.70 level, we want to be adding more buy at the breakout retest of that structure. So that is how we are going to be navigating the gold market today. So I wish us all the best of luck. Please mark out the structures accordingly on your chart, as you are going to be needing them as a reference point to guide your trading decisions today. So we're noticing some selling pressure going on right now. I think I'm in a loss of about 30 pips at the moment. I don't care. We've made a lot of money from gold, so we can afford to risk this on this trade and see how it's going to play out. So like I said, stop losses below or around the 3,380. So I will just do that right. Okay, I think I've done that already. So stop losses in place. Let's see how the market plays out. If it continues to the upside, we get busy with joining or adding more position. But if it drops, we are looking to sell the breakdown retest of the 3,385 level. So that is my simple view on the XAUUSD for today. I hope I made myself very, very clear. If you have any questions whatsoever, feel free to let me know in the comment section. If you need clarifications, no questions is insignificant. Anything, just ask me. I am here and willing to be of help in that regard. And do not forget to give the video a thumbs up if you have found this content helpful and useful in making your independent trading decisions around the assets we have talked about today. Please support the channel by giving the video a thumbs up. Thank you very much as you do so. And for those of you who had liked the video already, thank you very much. So let's see if we have any questions before we start rounding off on today's Forex Morning Mastery. All right. All right. So, in the absence of no further questions, I want to assume that we are all on the same page and the structures are duly marked out on our chat. So let's exercise patience. Let's allow the structures to mature before jumping into any of the trading ideas we have discussed today. And of course, I wish us all the best of luck. So today we were able to take on the 3 financial instruments that we are going to be monitoring for this week, which includes the USOILSPOT, the USDJPY. Finally, we are back into the USDJPY based on popular demand, and of course, my favorite, the XAUUSD. And always remember that every decision we make in the financial market is more or less an educated guess until price action hits your TP target. So with this understanding in mind, let's ensure that we have a well-defined risk management strategy in place. For those of you who joined us for the first time, I do hope you are able to gain 1 or 2 things from our discussion so far today. If you did, you want to be part of our subsequent editions. I look forward to seeing more of you. Same time on Wednesday, 8:30 a.m. UTC. That's 9:30 a.m. West African time, as we come here again to review how well these assets have been doing and of course prepare ourselves for the second half of the week. So I want to wish us all the best of luck. For those who have supported with your likes, thank you very much. I really appreciate your support, and I want to wish us all the best of luck as we continue to monitor price action. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye.